All right, here we go. Good morning. Good morning, everyone. It's Tuesday, May 5th, 2026. New day, fresh start. Welcome to Pitbull Traders Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, real time technical analysis, and actionable setups, all with the focus on building real trading skills and the mindset designed to drive consistent profitability. Each morning, we come in with one goal: to build out the structure before the open so we're operating in alignment with the dominant forces of the day, not guessing, not chasing. All right, so let's get after it. Let's map it out. All right, we're going to start off like we do every morning on our 4-hour chart, build out the analyze the higher time frame so we know what happened yesterday. We can also set our plan for today. All right, so coming in, first thing that we can focus in on is the breakout, right? We had this large balance area that formed here over the course of about a week and a half, and then yesterday we had a breakout over it. And what's telling it wasn't yesterday, but we broke out over it. And what's telling is that now yesterday's pullback held the highs of that. So we have an hourly trend that's intact, and we have a higher low. So pretty simple to read there. We have our marker. We have broken out, and now price is now opening up within the higher portion of yesterday's range, close to testing value area high. And so the one piece of context that I think is most important to point out is dips are being bought. Even shallow dips are being bought. We didn't have to return back to this area. We kind of just formed a higher low where we came in. We tested Thursday's high and found buyers that reversed the trend and started pushing price higher. All right, so let's look at what potential resistance points on the higher time frame could we run into today. And immediately we can see that, it's always difficult when you're at new all-time highs because there's just no structure above you. But we have this trend channel here that comes in roughly at about 73.48. And you can also make the argument that we could drag this down a bit and go highs to highs. That might give us a bit better of an idea for where we might run into some issues today. That comes in at 73.29. So let's call it 73.30 to 73.35, as these are just rough estimates, and it's really not a long-term trend channel. All right, so let's get into the 15-minute chart. We're going to do like we do every morning. We're going to map out the most bullish argument. We're going to map out the most bearish argument. And also, we're going to talk about a couple of trap trades and really the context of what has been happening. So first, before we get into the most bullish argument, the bearish argument, the one thing that I think is really important to cover is the context, right? So what we've been seeing over the last 3 sessions, and it's more easily seen on the 15-minute chart. I'm going to drill this down a little bit, get into the 2-hour time frame so we can see it a little better, a little clearer. All right, so the first thing that I want to bring your attention to is that for the last 3 sessions, starting last Thursday, you can see that even going back to last Wednesday, each morning we've been faced with weakness off the open, right? Here we had weakness. That's going back to Wednesday. Here's Thursday's weakness, right? We opened and we immediately sold off. And here's Friday's. And then here's yesterday. So we get a little bit of traction going to the upside. It seems like there's a liquidation break each day, but we still keep holding higher lows on every pullback, right? So even though regular trading hours, there was an attempt to push higher, but in light of that not being able to break out to new highs, we still held the overnight high and closed just below it, gapped up Sunday night, saw some weakness, held Thursday's high, And here we are now grinding to the upside. And I think it's important to note that going into today for any long trades, you have to expect that it's going to be a grind, right? It hasn't been the explosive trend day type market where you get like 1 or 2 or even 3 days of trend type action higher. It's been more of a grind. And for whatever reason it could be distribution, it could be several things, but we're just going to be aware of it and make sure that we're adding it to our narrative. Okay. So let's map out the most bullish argument. Quick sip. Thank you. All right. Let's drill down. Let's get a little bit more let's get a little bit more granular here on the 15-minute. All right, so we're going to start off like we do every morning, and we're going to frame out. So what is the state of our overnight inventory, right? And to get that, what we do is we look at, we just eye it up, and we're going to look at how much of the overnight price action took place above the settlement price. Let me just fix this, 72.69. Okay, so yesterday's settlement is 72.39 quarter. 72.30 quarter. That's yesterday's settlement price. And we can easily discern from this chart that our overnight inventory is net long, as all of it has taken place above the settlement price, right? So immediately what we do with that information is we understand that there could be a liquidation break off the open that kind of resets this inventory. And then what we have to do is obviously look back to our hourly, our higher time frame to see where can we form another higher low. All right, so let's map out the most bullish argument. So if we open at 72.63 and we rally straight off the open, right? Immediately what we're going to be looking at is what? Yesterday's high. Yesterday's high is coming in at 72.71, but we also have to be mindful of Friday's high, right? Right before the liquidation break, the new all-time high is 7,375. So let's make sure that we have that framed out. We're going to use this as a reference. So the most bullish argument is we rally and we break out above the overnight high. We break out above yesterday's high. And at that point, what we could do is look for pullbacks that can get us long, with our risk marker kind of being this structure that's forming here, with the low being 72.57, or even pull back as low as 72.60 here, 72.57, where this volume transacted, right? Where this took place. Let's make sure that we understand that on any pullbacks, we're not going to really get bearish. What we're going to do is monitor for price to stall. And if it does stall, then we're looking for long ideas. We're looking for long entries, right? Anticipating a breakout over yesterday's high, over the overnight high. Another way to play it is we wait for price to confirm by getting above, right? And then entering on a pullback to yesterday's high, the overnight high, 72.71 to 72.69. And we'll look for entries that get us to we'll take our scales along the way, but ultimately we're going to be targeting Friday's high, 7,375. All right. So that's the most bullish argument. I think that from what we've seen over the last couple of days, that probably has a little bit lower of a probability. Adding to that, our overnight inventory is net long, so we have to be on alert for a liquidation break. Okay, so let's talk about the trap trade while we're up here. Let me just get a quick clip that. Let me just grab this. Let me just get a screenshot of it. Bear with me. Great. All right. So let's move on to the trap trade, right? So let's say, since we know that the overnight inventory is net long, there's typically a reset of that inventory or a liquidation break, right? So say we open here 72.62.75, and we rally and we look above yesterday's high, and then we start to spot weakness and we come back into the overnight range, right? The overnight high currently is 72.69. So if we come back into the range and price stalls out and is unable to reclaim yesterday's high and the overnight high, at that point we could consider short trades, short scalps, with our risk marker being yesterday's high or this local high that forms on the rally. Okay, but if we get back into the overnight range, at that point, we can start looking for short trades that get us down back perhaps to value area high, maybe test this structure, take a scale here, right? And this is the way you kind of avoid failing those evaluations where you're taking your scales along the way. And so once price holds yesterday's highs, unable to gain acceptance back above, we can start looking for entry short that get us down to 72.60, 72.57, and also maybe a test of yesterday's value area high, 72.44.50. Now remember, yesterday's value area, every day has a value area, and what that simply is where 70% of the prior day's value of the prior day's volume took place. So yesterday's top range of the value area is 72.44. The lower value area is 72.10. So we'll be monitoring value area high at 72.44, obviously taking scales ahead of that so that we can make sure that we get green and get profitable and pass those evaluations. So anyhow, once we get down to value area high, we can monitor for continuation. If we slip right through it and we break down into the value area, then what we're looking for is a retest of the settlement price down at 72.30 for a full gap fill. And what we'll do there is monitor then for support at the settlement and at yesterday's volume point of control. Now remember, the volume point of control is the singular price where the most volume traded the prior day, where the value area is 70% of yesterday's volume transacted. The volume point of control is the exact price where the most volume transacted. Typically, you want to initiate a trade in that area because of the amount of volume that transacted there, price tends to fall. It get a little bit choppy while it cuts through that inventory. All right, so that covers the bullish trap trade. Let's take a look at the most bearish idea. Okay. All right, so say we're opening here at 72.66 quarter. Say we get like what we've been having the prior 2 days. We get a liquidation break straight down. At that point, what we're going to do is we're going to monitor the 72.57 high right here, and if price just cuts right through there, we're going to have to contend with the volume weighted average price. The volume weighted average price is the average price of where the most volume has transacted from the start of the session, and that being yesterday's 6 p.m. open. Okay, so if we break through the 72.57 and we break through there with strength and momentum, at that point we're looking for pullbacks that kind of hold this structure up with our risk marker being 72.60. All right, and we can enter on any pullback for a look for a trade down to the value area, maybe even a full gap fill at 72.30. At that point, if we're really bearish, we're gonna get a momentary bounce at the volume point of control and at the settlement. And what's important to frame out there is we want to watch how price reacts there, right? So if we get a 2 or 3 point bounce and then price is just going right back down to test it, we're going to understand that that's weaker. Sellers are offering and they're being aggressive. At that point, if we bust through that and we get down below, we're going to be looking for that trap trade, right? But first, the most bearish argument, we get down below, we test the settlement, and we just bust right through it. And if we do bust right through it, what's important to monitor is the hourly higher low at yesterday's low, 71.99. Okay, that's going to be where the trend shifts, right? The hourly trend would change. The hourly trend would change below 71.99, and that would that's gonna send radars out. That's gonna send alerts out and let us know that, hey, we have potentially a trend change here, and we'll have to judge the strength and momentum of that move to monitor if we want to get short on any pullbacks and monitor the continuation of the trade. All right, so that covers the most bearish argument. What if we come down? Let me just get a screenshot of that. Okay, so if we come down and test, and I think this trade probably has the highest probability, and I'd be really looking forward to that. If we come down and we test the settlement, right? If we get bearish, we get back into the value area, look below the settlement, right? And all of a sudden price stalls out, maybe test a little bit lower, but ultimately fails, those sellers fail to gain any traction, then we can start looking for a higher low with our backs up against, with our risk marker being this local low, and we can look for entries that get us back into the overnight, the back over value area high, obviously taking our scales ahead of that and making sure that we're monitoring our risk. At that point, we can start looking for continuation and maybe even a potential breakout over the overnight high or even yesterday's high 72.71, with the ultimate target being 73.75. All right, so we'll monitor for that as well. Another scenario that might play out is the same concept except below yesterday's low, because remember, this is really important level. This is an hourly higher low, and if that fails to hold, if we test below it, trap shorts, and then immediately reclaim it, we're going to be looking for that higher low entry that gets us back into yesterday's range, and we can look for entries on the trend line break above, looking for scales or looking for a test of the settlement of 72.30, and ultimately maybe taking our first scale at overnight low 72.23 quarter. All right, so we covered the most bullish argument, the bullish trap trade, the most bearish argument, and a couple of bearish trap trades. All right, with that being said, let's cover the last final outcome and frame our narrative really well. We always want to have our analysis have a good holistic approach to the day. And so let's say that none of these scenarios play out. And at that point, we're looking at a sideways market. We're looking at the dreaded sideways day. And one way we're going to be able to tell that is if we come down, price is moving slowly, kind of just grinding higher, grinding lower, and then ultimately we just stay in the overnight range, much like we did yesterday after we made the low, right? Price is just grinding higher. But if price fails to get back into yesterday's value area high and kind of meanders a bit, we're going to have to switch our approach and switch it to fading the edges, right? Taking our scales much shorter targets. And yeah, so I think that covers the sideways market. I hope that doesn't play out. That's always a tough day. But all right, so we covered the most bullish argument. We covered the most bearish argument, a couple of trap trade ideas. And now let's do as we do every morning. We're going to monitor where's our opening print and where's price in relation to that opening print. All right, so let me get the open here. Always want to have that price on our radar. Dang it, come on. All right. Yeah, so we opened today. Our opening print is 72.67.5. All right, and I see that Bo has just joined me. What's up, Bo? How are you?
Good morning. Hey, good morning, guys. How's everyone doing? Can you hear me, Manny?
How's it going, buddy?
Good. How you doing?
Not too bad. Not too bad. Another fun day in paradise.
Yes, sir.
All right. You have anything for the folks at home, for the folks watching?
Oh, not yet. Just sitting and waiting here as I usually do in the morning. I'm 2 hours behind you, buddy, so I don't get up and start working on the charts 2 hours ahead of everybody.
Oh, that's right. What's your time? What's your time zone there?
Colorado Springs, Mountain Time Zone.
Got it.
Yeah.
All right, good to know. Do you have any trades going on right now? You have any positions on?
I always just try to, for me, I do better when I wait and let things kind of show me some directional bias and stuff in the morning. And that's, to your point, like, to a lot of the people out there that are teaching in the rooms here, is stay aligned, stay focused on higher probability setups. So for me personally, that's, I don't plan them so much. I let the day show me more first, and then I kind of take it from there. So the start is whether we're above or below the open, and then I use my moving averages on the shorter and longer time frames. For me, I'm a day trader, so 1 minute time frame, 15-minute time frame, and try to take my signals and be, a probabilistic trader, that you're going to take some losses, but over the long haul, things will work out when you follow your rules and follow your edge.
How important is it, like, for you? And I'll go next, but I'm curious. How important for you is, like, you know, your a good night's sleep, and how you're feeling, how you're coming into the day, how your mood and how you're feeling.
That's critical. It's one of the harder things to figure out as a new trader as well, or even not a new trader, but even a seasoned trader. When you're going through anything personal and disruptive in your life, it is a really good idea to take time off trading. A lot of
Right,
times you
right.
think you've got it, you know, you think that it's something you can control, or you think it's under control, or you think, it's not affecting you the way that it does. But what we really face from a danger perspective is when things are out of control in your life, and then you start trading, it's very dangerous, because you can get into this mode where you're trying to then project your ability to control the markets as a way to compensate for the things that are out of control in your life. So when you have these personal issues that are really stressing you out, then you come in and you try to trade, and it's a good way to blow out an account. So
Yeah, agreed. I think that it shouldn't be overlooked. That's an important concept. Making sure that you're rested and you're sharp for the day. It's the only way to get in that flow state.
yeah. And I'll have times when I wake up and tell myself, okay, don't rush. There's no reason to rush. Let the trades come to you, all the things. And then I'm still anxious, and I still rush, and I still make some poor trades, right? If I wake up, even with my posture, I pay attention a lot to my posture, how I'm sitting in front of my desk, whether or not I try to have a very kicked back kind of posture, because I feel like it helps me with, let things develop, let things play out, let things come to me on my terms instead of the other way around. And it's like, it really makes a difference. I mean, I miss a lot of trades because I'm not up 2 hours ahead of time doing a bunch of chart analysis and stuff and trying to trade opening drives and opening thrusts and stuff like that. But for me, those aren't that's not my bread and butter and my good time frame and my good mindset for trading. Like my good mindset is to give the market 45 minutes or an hour, and then kind of go from there. So I mostly just watch and try to try to get myself into that mindset, if you will. That's more important than trying to find that first quick trade. I'm not like, for other people it could be, if you have a day job that you have to go to and you have 30 minutes on the open to trade, then maybe you wake up an hour and a half ahead of the open and study your charts and get ready for the open and have some ideas for trades that you're going to take, because and maybe it's just one or two, because then you take those trades, you let them play out, and then you go to work. I'm here all day, so there's no rush. I usually, on a 1 minute chart, I mean, I could have 10 or 15 signals a day on a good trending day. So there's just no reason. I don't try to trade that much. I'd rather only take about 2 or 3, maybe 4 trades a day. And when I kind of keep myself slowed down and in that pace and in that sort of mindset of, if there's 10 or 15 good setups, like, but I get 2 or 3, then that's great. Then they either work or they don't. But at least I'm not over trading. I'm not churning commissions. I'm not. And part of it is what you talk about a lot is stop loss protocol, where it's not even stop loss protocol. It's more of exit loss, or exiting a trade protocol, which is to say, whether I'm stopped out for a profit or for a loss, I like the concept of walking away or waiting at least like 15 minutes to see, well, why did you just exit that trade wherever you did? Like, because typically I'm exiting on a stop, not on the limit, but sometimes my profit targets will hit perfectly, but usually I'm trying to get that profit target, but I'll trail my stop. And so then if I get stopped out, don't be in a rush again to get back in. Like, see why you got stopped out. Is the market trying to tell you something about the price action? Is the price action reversing it? Is it just consolidating and going into a sideways chop? Is it just give it some time?
Hey, so really quickly, heads up here. We looked above yesterday's high. Yesterday's high was 72.71. We traded as high as 72.74. 13 contracts came off at the high, and now we're seeing a little bit of a pullback here. So stay on alert. We want to see if price gets back below 72.69, right? And that's the overnight high, and that would signal to us that maybe we have to be on alert for a breakdown here. All right, look above and fail. One of my favorite setups. Let's see how it plays out here. It's always risky to try to trade a. All right, let's see what we're getting here. Hang on, hang tight. It's always risky to trade, against a strong trend. It's not something I prefer to do. I prefer to wait for those lows to be settled in, but these look above and fails. Given what we discussed earlier this morning, we've been seeing weakness every morning, so there is an argument for it. We'll see how it plays out. Let's get a quick look at the internals. 1.1 1-to-1 positive on the NYSE, 1.8 to 1 positive on the NASDAQ, so just about 2 there. Crude oil is down 102, is down 3, almost 4%. Let's see. The VIX is gapping down 5%. So that heads up there. I think we're going to catch a bid here. Let's go ahead and close that out. Yeah, I think we're going to catch a bid here. I think so if you guys have the execution clock, you know what we're looking for this morning. If you don't, or you don't know what we're talking about, go check it out on my X feed at mannytrends.com, at mannytrends on X for more information there. Looks like price is catching a bid here. So this morning we're looking for that high. Let's see what transpires here. We looked above slightly, but you can see here on the 15-minute, right? We're eating into that wick, putting those quick sellers that we're looking for lower price action, looking for that look above and fail. Let's see if we can get over 72.74 and catch a following. Staying open-minded to any possibility here. And, you know, the one thing that's interesting to note is that, you know, once you've had like 3 days of one type of, you know, we've had 3 days of liquidation breaks at the open, right? Those trends tend to run dry. They become fairly predictable. We all know that ES does not like to make it easy. All right, now we're retesting 72.44. We're above it. Let's see if we can catch a bid here. Getting jittery up here. If we can break out, if we gain a following here, we need to look up at 7,300. It's also important to note the Sunday night open high, which is at 72.79. Let's monitor that.
Don't think, just do, JM. Here, I found this. If any of you guys are using TradingView, I found this cool moving average indicator, which is basically the exact kind of thing that I like to do with my moving averages. Is when they're, you know, it's a sloping system. It's, you know, buy the pullbacks to an upsloping moving average and short the, you know, the other way around. So I found this indicator over the weekend where it just colors my moving averages for me. So I don't have to think about it as much, but you still have to think about it during the periods where it kind of flattens out. But it's kind of cool because then I can just have a quick look at and see, okay, the longer one is sloping up, so it's green. shorter one is sloping up, so it's green, and we're above the open. So we're trying to put in a green candle on the daily so far. I mean, obviously it's early, but so that's kind of those are kind of like the quick 3 filters that I use on this stuff, which it's kind of nice. I found that. And then the other one I found is this thing where I can adjust my my shading based on time frame. So it gives you 3 different time periods to be able to put the hours in of where you want it, and then you can adjust your shading, which may not be helpful for people, but
Popping. We're popping. Stay in alignment with the clock, guys. Stay in alignment. Man, I was reading this article this morning about this site about AI and watching this. I was watching a Stanford lecture on large language models, and I don't know. Quick question for you guys: do you guys think AI obviously keeps getting better? Do you think it creates more opportunities or less, or takes more jobs? Feels like every week AI is doing something different. Meanwhile, we're just trying to trade the ES cleanly.
yeah, I think that's the the question for the long term.
Breaking out here, breaking out. Good strength and momentum. Good follow through. It looks like that's going to be a higher low today for S1L. I'm not sold on this breakout here. I did try the look above and fail, and I think I lost like 3 points on that. I have terrible allergies, by the way. So if you see me blowing my nose, pardon me. This pollen is so thick you can cut it. It's like this green moss on all the cars here.
Oh, really?
That is a trade that I'm willing to try again if it materializes. But now I need price to get to prove it. I want to see proof of life. I want to see us get below yesterday's high, and then I can assess like on any retracement of that move. Again, like Bo said earlier, right? It's early in the day. You don't want to start attacking the market in the first 20 minutes. But we are firmly above, printing firmly above yesterday's high, above the overnight high, and above the opening print. So there would be a lot of wood to chop here for bears to get through. And you know, if the ES sells, we know it sells, right? So we're going to see it. We're going to know it if we see it. Look at prior days liquidation breaks, right? You just get these huge prints down, right? Look at these prints. Look at yesterday, just it's like an hour and a half, 2 hours of selling. You don't want to get caught on the wrong side of that.
No,
But
you don't.
monitor here the hourly trend firmly intact, right? We have higher lows, higher lows, higher lows, right? So ultimately, it looks like we're headed for up here. That's the scenario we outlined in the pre-market. So
5 minutes till these numbers.
And if you're just joining us, I'm Manny from Pitbull Traders. We're tracking the ES. We're looking at this breakout over yesterday's high, see if it has legs. We want to monitor yesterday's high, 72.71, on any pullbacks. We're testing that now. Let's see if it holds. Yeah, that would be great, Trey. So guys, heads up, quick alert. You know, that's one of the great things that we have here. We have so many astute traders in our orbit and in part of our community. And just alerted that Trey, who does our Sunday night open, Sunday night with Trey, he does this really holistic approach. I love it. I watched it last Sunday. Great information. I suggest you go on our YouTube channel and view it. He's going to be jumping on here shortly. Let me see if I can get a time from him. And he's going to give us some insight on something he spotted.
Yeah, JM, that's how I am. If you know that there's numbers that you want to watch and that could impact the market, it's either decide to get an early entry that you can then exit into on a profitable trade, or I wait, and let's see what the numbers say and then how the market reacts to them. But you definitely want to be aware of those, that we've got these coming out in a few minutes. Things can, they just sort of can run the stops both ways. They can get a little funky here going into it. And so that's kind of how I am. I like it when you can exit into the news and when they're sweeping the liquidity. But you just don't want to be taking an entry right now 3 minutes ahead of the number. And actually, if you're trading prop accounts, some prop firms, like, those are part of their rules that you can't do. So,
Yeah, heads up, guys.
Eval versus pro. Good.
At 10 a.m. here, we just in about 3 minutes, we have ISM coming out, Jolt's job opening. So very, very smart there. You don't want to start initiating anything right just before news drop, right? You could just the volatility alone, especially for guys trading prop accounts, right? The volatility alone can could lead to a fail, and you might be right even in your position, but just get shaken out. So trade safely. Let's let this number drop. Let's trade the reaction. I think that the news environment right now has a lot of people, wondering like, hey, they've got all this war going on, and why isn't the market lower? And that's just, I think that's just a good reminder that, that narrative doesn't have to match, doesn't have to make sense. There's one thing that moves the market, and that's money. It looks like I'm hearing that the number came in below expectations. The price doesn't care. Looks like my Ninja Trader is a little bit stalled here. Yeah, but looks like we're going to rally here. All right, we held the pullback to yesterday's highs, and now the price just seems to be grinding. I think that's one of the things we framed out earlier this morning was that this market is not explosive higher. It just has this grind higher type of look and feel to it each day. Jay Mark points out maybe we'll get a chance to buy the dip. We'll see. Yeah, I know, right? So yeah, I hope so. I hope it's not one of these days where we just have to hold our noses and buy shallow dips. But I mean, that seems to be the case. Yeah, I was looking for that low into that window, and we just pulled back to yesterday's high, and we had a delta divergence right there. I mean, I had to buy it reluctantly. So we'll see how it plays out. I did not get a great fill at 72.73, almost 72.74. I mean, but look at this hourly trend, man, on the left, right? This thing is just so bullish, so bullish. I mean, I don't want to stand in the way of that. There was this post going on. I'm not sure if you guys saw it, from an interview with Warren Buffett. I reshared it on my feed, and you can go catch it there at manny_trends. And in it, Buffett was saying, so one thing I find it interesting is that uh, Berkshire Hathaway is holding their largest cash position ever, and I think it's like almost 400 billion in cash. And so one thing that he says that stood out was, he said, I don't understand today's market. It seems like it's just people gambling. And I thought that was interesting, because maybe not in the market, but like with all this poly market, Kashi, FanDuel, all these different ways to gamble now. It seems like it used to be that you had to go to Vegas to gamble if that was your thing, and now it feels like you just have to open up your phone and you can start gambling, right? And so I wonder, it feels like more people are trading lately than ever before, right? I think prop firms have done a lot for that, and that's great, because prop firms offer a lower risk opportunity for you to learn how to trade. But the real question is how many are actually building a process versus, gambling, chasing moves? And I don't know the answer to that. What do you think, Bo?
Well, I think that's the point of the rules, whether it's with the prop firm or for yourself. That's why the rules are so important. Your rules help you build your equity curve, the long-term probabilities are what's important. So I think a lot of the people out there that are actually have been drawn into the futures prop firm business and trading systems and stuff. I think a lot of them are gamers, um, and they're very familiar with gaming theory and all of that kind of stuff. So the ones that are successful are just using that and doing it the way you should do it. And so I think it's a lot. I think a lot of people are out there. That's the point. They're trying to work and build this opportunity for themselves, for their families. So I mean, the impulse stuff is what you have to sort of learn to master, because it's easy. I don't know. I mean, I've always found it easier to trade sim, I mean, it's different when you go into a live account and your money's on the line. It's just, for whatever reason, that's when things tend to change, right? Like, you can sit there and play poker all day long and sim and make all kinds of money and do everything right, and then you go put down a stack of chips in Vegas on the poker table, and it's a different game there. But yeah, I think that that's definitely the focus and goal of most. If it's not your focus and goal to be doing that, then the likelihood is that you're just going to be giving money away. You know, I've done it. I can tell you.
Yeah, I think we've all been there. Yeah, I think impulse, those impulse trades are I so that's in my opinion, that's the most significant hurdle to get past. And it's interesting because it works both ways. So I have some tools that I kind of coach people on with those, that I help them out with them, and it's all based on preventing that, right? So I think it's easier to work with traders that are newer because they have less habits, less baggage. But those impulse trades, it was a big deal for me to get past them. And my and in going through that process, what I realized was there were two different types of impulse trades, right? And both were horrible. Both came at the wrong time. But one was an impulse trade that happened after a loss. And then also there was to a lesser degree, an impulse trade that happens after a win. And so I created two tools for that, like stop loss protocol and also post win euphoria, that to kind of mitigate those. And then implementing those tools was like, so I learned that it was impossible to effectively implement those tools while I was sitting at my desk. So I had to like step away. And if I had not committed to that, I learned that if I had not committed to that, I would not be where I am. I learned during that process that you have to I have to create a disconnect between me and the screens in order for that to subside. And especially after losses, the feeling is less intense when I come back, right? Like, so at the point that it happens, the feeling is kind of peaking, and then it kind of subsides after that. And that was key for me.
Nice. Yeah, that's good stuff right there. And that's what I mean too, is like learn from the exit. Like,
Uh-oh, looks like we got some news coming out here. We got some action here. I don't know what's going on. Let me check out the feed. I don't hear anything. I don't see anything. I don't think the high is in. Let me know if you guys see anything coming across the wire. Keep me updated. Price is definitely getting jittery, coming back down, testing yesterday's high. Heads up, we could be seeing some. I don't think the high is in though, guys. I'm reading the order flow here. Stay alert. But we could be putting in the S1L AM low here. as well as we could be seeing what we have been seeing over the past couple of days, a strong liquidation break after the open. This looks a lot like what we saw on Friday, as well as yesterday, where we get this strong rally. You can see it really clearly here, right? On these 2 days, we had this rally off the open, right? We tested this point and then price retraced. We had it here on Friday, rallied and then price retraced. So let's just stay alert here. And if that's the case, if we get back into the overnight high, and we even had it on Thursday as well, right? So, well, we didn't rally first; we rallied in Globex. But anyhow, if we get back into the overnight range, which we are now, 72.69. At that point, what are we going to do? We're going to look for liquidation breaks that get us down at least the value area high, 72.44. If you guys are just tuning in right now, the ES broke out. We were looking at long trades. We're looking at yesterday's high to hold, overnight high to hold. Those prices are 72.69 to 72.71. And the resumption of the trend above yesterday's high. If we get below or into the overnight range, so if we break below 72.69 and also the opening print at 72.67, then we're looking for a liquidation breakdown to value area high at 72.44. I gotta look at which one of these ATAs. 153. Okay, so wait. Price called a bid. Let's see. Price needs to get above 72.77 here. Watch for it to test inside this wick and fail. So if you're just tuning in, we're monitoring this level right here, 72.69, where we just pulled back to 72.71. And now we're looking for price to see if it catches a bid or if it fails here.
All right, I've got a short signal here developed. So I am going to see if I can get short the high, a retest of this candle on the 1 minute. 76.5. Offered.
We're testing that 72.69. We just tested the daily open and we bounced. Quick bathroom break for me. I'll be right back.
Join us for Live from the Pit, where we deliver high energy. Join us for Live from the Pit, where we deliver high energy trading insight. Join us for Live from the Pit, where we deliver high energy trading insights. Experience live preparation and execution with real trades and actionable setups. Trade smart, not impulsively. Expect precision and discipline in every move. Watch the charts, feel the momentum, and make informed decisions. Join us daily at 9 a.m. and become a confident trader without the noise. Subscribe to @Pitbull Traders on YouTube and
All right, I'm back. Looks like my Ninja Trader crashed, so I had to relaunch it.
Okay, I'm filled there. Looks like I might just get ripped right through, which is fine. Got one each at 73.5 and 70.5.
I gotta get my the algos loaded here. I lost Ninja Trader. Hang tight, guys. Let me just work on that. Excuse me.
I'm stopped, 4-point stop.
right, so the A4 algo will get me long here at about, if we get pulled back 72.74, I'm looking for that. I'll let that execute. If it does, great. While we were chatting, it did execute another trade for me, which is always nice, right? I didn't notice it, but when I checked the account, there was like $400 in there. Yeah, this thing is so bid right now. It's like, it's tough. Oh, wait a minute. There's a little slight divergence here. Wait a minute. No, I don't think it's anything to be on alert for. We're gonna still let this thing run, get me long if you on pullback. Frame it out here. Oh, look at that print. Look at that 15-minute print. That's so bullish. Completely engulfed the prior selling tail. It's hard to get that move back, right? Like even looking at it on a 6, let's see what it looks like on a 60. That's just a hard move to get back. I mean, anything can happen, right? Yeah, look, we came down, tested this one, tested the prior high, right, on the 60-minute. So this candle here, this low here, came back and tested these highs, right? High here, found a bid, blast off. Looking at 7,300 as your next upside target. If you're long, stay long. If you're right, stay right. If you're flat, wait for a pullback. That was when we opened here, when this candle printed, that's the stop out that I took. I faded it. I caught right there, right at the yesterday's high entry. I think I front ran it by like 71.50, and then it just went back on me, and I just closed it out like at 73.58. As soon as it didn't go cut right between it, right lower, I'm not even thinking, just hit the close button, reassess. And so it never really even got back in yesterday's high. So I could have avoided that if I would have waited for a little bit more confirmation. I am getting better at executing while live on screen. What do you think is worse, like getting stopped out? Wait. No, what do you think is worse? Missing a trade or getting stopped out and then watching it go without you? Oh, that's easy for me. Getting stopped for me, getting stopped out and then watching it go without me is probably the worst. Like seriously, that just grinds my gears. Hey, okay, so hey guys, just quick heads up. It's 10:29. We're gonna be joined shortly by Trey. If you don't know Trey's more of a swing trader. He gives us big ideas, lets us know about the bigger picture. He puts on a show every Sunday night prior to the Globex Open, and that really gets you ready for the rest of the week ahead. Great always to have Trey come on and share his insight.
Happy to be here. Can you hear me, Manny?
Yes, I can. Hang on. Let me just make sure that the folks watching on socials can hear you. Hang tight.
Sure.
Okay. Yep. We got you going on there. And let me just do one further thing. All right, Trig. What do you got?
I'm going to drop a couple of links in the chat for people to check out. that kind of spawned this conversation. That and a good friend of mine who hangs out in the swing room but does not participate too much. I'm going to get on him about that. Former growth and income portfolio manager, very focused on rates and particularly their impact on equities. Just it's been very topical with some of the moves in the last couple of days. And what I want to highlight is we're not there yet. In my opinion, of course, everything I talk about on here is technically based. And I just want to show kind of what would really get me a little bit more fired up about what's going on in rates. You know, we can see, I'll zoom in. This is starting February. We had a nice little move. There was some concern there. But this is, you know, the last few days, that's almost a 30 basis point move on the 2-year, which is what I'm looking at right now. This is a 2-year yield. So it is raising some questions and, you know, some eyes and things. But when we look at this, this has been in a consolidation for 2+ years. And I am not going to worry about things until we get what I call a real breakout. The first one here that I would look at is 4.067% on the 2-year. Even that, okay, then I'm definitely paying attention if we can break out over that. But this level right here is a little bit more critical for me, which is almost 4.4% on the 2-year. It can do, if you listen and you said you do, I've been very sanguine about fixed income for at least a year, probably longer. I just don't remember, but pretty much every US yield chart is looking like this, which absolutely looks like a bullish consolidation. And I think the longer term outlook is higher. But we're just, I mean, if this were a semiconductor stock, no one would be too fired up on it at all. And I think the principle of supply and demand absolutely applies here. So this is the 2-year yield. Not too much going on there. US 10-year, yep, there we go. Almost identical with the 10-year. This is much more important, absolutely worth watching, and the magic level is 4.51 if we want to be really precise. And again, we're not through it yet. Pay attention, put it on your radar screen, absolutely something to watch. But I'll reiterate that if this was any stock that you're interested in, we'd be like, okay, you know, if it can break 4.63 or something, that's where we'd really start to be paying attention. And I'll go to the 30-year. Little higher. That's a tiny breakout, and I saw that mentioned right there. But still, okay. So because it's over the magic number of 5%, and yeah, that's a nice round number. Technically, that is a miniature breakout, and I'm not saying like ignore it. I'm saying like this shouldn't be crushing stocks yet. Holding, yeah, this one is starting to pay attention. I'd be more intrigued up here, 5.08. And then certainly up here at 5.15. If we get this breakout, then I think it absolutely will start to impact equities. But we're getting all this hand-wringing. People are focused on oil. People are focused on rates. People are focused on a lot of things that absolutely make sense, and I think they will impact stocks. My only real assertion right here is watch it, monitor it, but not yet. And I have seen, I dropped the Kobe Esser letter in there. Jim Bianco, who I think is smart, was talking about something over 5%. I will drop a couple more links in the chat just showing like this is the kind of headlines that we're getting. And yeah, pay attention, but you can't fight stocks yet because of what we're seeing here. Also, I just want to do, these are some spreads. This is the 30-year, 2-year. What is this? I don't even know what that one is. I have it saved. This is the 10-2. Again, everywhere I look, I don't see action that says, hey, this is going to impact stocks today or tomorrow. So that's basically it. I just wanted to come on, make a quick comment, you know, keep the conversation going. I think this is something we should be paying attention to, but that's it, not yet. So happy to take any questions, can look at a couple of different things, and we'll highlight what's going on. I'll drop a couple of links like what's going on in the UK and overseas. It is an issue, but we're just not yet. So that's really it.
So is that sorry? So you said you mentioned the 2-year, and I drifted away. Can you repeat that for me?
Sure. I'm just saying that, so the absolute levels that I would get, really start to pay attention here are about like 4.15%, being really precise, 4.143. But as you can see on the chart, it's not broken out even over kind of March highs. So this is the short end of the curve, most impacted by the Fed. I don't think the Fed's going to be turning around and raising rates anytime soon, especially with Warsh coming in. If this starts to really diverge from Fed futures, then that's something we have to pay attention to. But again, the real takeaway from these comments is watch it, but not yet.
So I think there's one question on social. So are the bonds confirming this move in equities, or are they diverging?
Neutral. They're just not impacting. They're not confirming or rejecting either. Those are firms I get pretty specific on. I'm sorry. Let's see. I'm sorry. I just might have gotten a phone call. Yep. Don't know who that is. So yeah, it's just if they move higher, they will become a headwind for equities. And the assertion I'm making is they haven't made enough of a move yet to be a headwind for equities. It seems, especially with oil, and I think that's most likely to be a problem, in my opinion. It's a question of how long it takes. But rates are, an incremental headwind, but not yet.
And so, so I was looking at the recent move in the 10-year, right? That's the one I monitor. It's up to 4.4. It's down 0.5% today, but really it's been higher. And what are your thoughts there? So is it pricing in risk? Like this move higher in the 10-year? I mean,
okay, I don't have my camera on, but if I have my camera on, I'd have to put on my tinfoil hat. I think Besant and company are actively managing rates. And the dollar, they're doing their best that they can. But I've noticed how if you look at historical, so I'm going to switch over to U.S. 10-year prices. Where do I have them here? Sorry, give me just 1 second to find it. I reorganized there we go. So this is the long bond, just for context, and this is the 10-year. So this is 10-year futures prices. And I want you to look at kind of historical volatility in range. And then here is January of 2025. The new administration comes in. And look at how tight futures prices have been ever since day one compared to, and that is real wide ranges. And we've had a lot going on with inflation expectations, with Fed pressures, and with things like that. And this is a super, historically tight range. So in my, again, like I said, tinfoil hat, I think this is being managed to the extent that they can. And what we need to have happen is them to lose control for rates to really get out of control. Down here, 109.08. You can see what I'm looking at right there, but this is obviously the huge level down here, 107.75 on the futures. But all in here, like this is not broken. Again, imagine if this is a stock. I don't know how to trade that. I can't. Some people can. Mean reverting traders and things like that. But I'm a breakout trader, and there's no breakout here.
Right.
So
right.
I can put numbers on yields and things like that. But I think that we've got active, yield curve control. Some of the things that they're talking about, keeping everything in check. I think they're doing a good job of it. It's effective so far. If this breaks out, and again, I just want to pound the table in a tinfoil hat. It means some things are going out of control, and that would be a big headwind for equities. But that's down here. That's it.
Right.
We have to break this absolute floor down here, 107. If we get below 107 on the futures, then then the Fed or Treasury or whatever has lost control, and things are going to become a problem. But right in here, there's a whole lot of nothing going on.
Yeah. I mean, look at the volume profile, right? It looks like obviously it's coiled really tightly. I think a move is expected, but I mean, it could stay coiled for
months, years.
Right.
If I'm right, and the Fed or Treasury is actively trying to keep this under control, they've got a lot of money.
Right.
And can't do it. So let's take that aside. Let's assume that I'm wrong there. Okay. Well, then then we're saying that the economy is relatively sanguine about rates. And again, we'll just, need to see a breakdown or something like that. But I think, anywhere in this range is neutral for equities. Just, it hasn't mattered since January of 2025.
Yep. That makes sense. Yeah. Yeah. I kind of have the same idea. Like there's probably not much to see there, but there have been, I wrote something for the opening print where there's just foreign buyers were buying a lot of bonds, and they seemed like they were more in demand. Maybe that's going to be anticipating some type of move. I don't know. I noticed the buying, and I figured I'd pen something on it, but it's hard to read on that chart. There's really nothing there to go on.
Nope. I think you raise a very good point, and that is, it has a lot of potential if China, Japan, UK, some, the huge buyers, if for some reason they don't want to buy our bonds anymore, then I think that'll be a real problem. This is my own personal, I don't know what the right phrase is, but this is the US dollar index. Let me back out. I talk about this almost every week. It's definitely featured in my report.
I'm glad. I was going to ask you to repeat that for the folks that didn't catch it.
Sure. So this is a 15-year trend line. This right here is March of 08. This is the absolute bottom. I don't include that in the trend. And then this is when QE2 really came in. You can see what was going on, all this QE and everything that's going on. But this is where I think the trend started. It really got tested here during COVID, and really tested here in how it's only a couple of data points, but that is a almost 20-year trend line from 2011 to 2016 to 26, 15-year trend line, with one real violation right here that was January of 2026, and then it reverted right back up to this. These to me are very good, very important levels, and you can see how tight that is. So I'm going to switch over to daily. And, tested there, one quick break, right back up here and coming back, now hovering, getting tighter and tighter and tighter. I think the dollar goes before treasuries go. If we're correct. Besant was on record last week. I'm getting a little bit away from my planned remarks, but this is something I think a lot about. Besant was saying that he is seeing demand for dollar swaps and that there are dollar shortages. This says he's lying.
For dollar swaps and their dollar shortages. Okay.
Hard dollar shortages. And he was essentially, these were in comments. I'll see if I can find the comments and I'll post them in the chat. But yeah, he said basically the dollar is in demand overseas so that people can buy oil, because oil is still dollar denominated. And some of these economies that are being impacted, specifically the Middle East, they need dollars to do transactions. And so that, the dollar is still the global currency. It's still the petrodollar, and it's still very much in demand. There is no indication at all of a squeeze for US dollars. Maybe there was back here, but this right here, I see nothing that says we have any kind of global dollar shortage. Nothing. It's much more likely. I really think the next move in this is down. Don't anticipate it, because I've thought that. I really started banging the drum on this back in August of 2025. And I was right with some of the weak dollar trades, gold and silver. Again, I'm repeating some of my comments from Sunday night. I think the next weak dollar trade is in energy, but gold and silver, a whole bunch of things could do well. Don't anticipate it. Here's exactly what you need to do. It breaks this, and if it gets below this, 95.58, then own everything weak dollar. But that's just a lead into the rest of the comments, which are on treasuries. If this will go first before treasuries do, in my opinion. These are all technically based comments.
Okay, picking your brain here, dragging you a little bit off topic, but something that I'm personally interested in watching. Bank of Japan recently raised rates, which they hadn't in a long time. Well, not recently, but they did. Can you explain to the folks what the risk is there? If the Bank of Japan raises rates?
You're definitely getting outside my area of expertise.
Okay.
I know someone who could answer this question really, really well, and I actually should invite him into the swing room. That I think is beyond my purview. So obviously they've had. So what I can say is that they've had essentially a recessionary, low rate environment as long as I've been in this profession, and that's back into the early 90s, they peaked in what, 89, I think.
Yeah.
So, and they have not had to raise rates, but so this is the 10-year yield. Let's go back and talk about this. You know, this is 06 down to 2019, a 13-year downtrend, and you can see it really started to take off, I'll say 2023, and that's a massive move in a short amount of time. So this is the 10-year yield. They're developing some sort of inflationary problem. The 30-year over there says the same thing, and whereas my USD JPY. So this is the yen, dollar yen, and this is also, you know, a change. We're back here and we're pushing the new highs. Yeah, I'm just showing you what the charts say. For me to opine on Japanese central banks is just beyond my purview. Definitely something going on in Japan. They have a new PM who it's a she, right? Came in to do some things decidedly differently about a year ago, and it seems to be working in terms of getting them out of their not recessionary.
It just seems to me if they raise rates, right, that'll probably signal the end of that carry trade, and I think I'm just curious how that might affect the, you know, U.S. equities, the bond market, and so on. Something that's been in play for such a long time, you know, borrowing and selling, and it's just people have made a ton of money from it. So I was just curious about that.
The carry trade has been in play for a long time. This I can opine on this right here. This was essentially August of 2024, and I traded through this. And this is when this was someone who was caught off sides. And I'm going to switch over. And so July 11th of 2024 to September, you know, mid-September. I'm just switching over to SPY. And let's go to the same time period, because I remember this because I traded it. And July 16th of 2024 to August 5th of August 24. So basically, when it really got out of control, it impacted our markets pretty sharply. And this was it was being described as at the time of a forced unwind of the carry trade. People borrow in yen and buy assets, and I think they can. I assume this was forced selling somehow tied to the unwind of the carry trade, and that is 565 to 511. That's 8% in a few weeks. That was a pretty severe impact. Yeah. So that's basically the only response I have is if we really have to unwind the carry trade, it's going to be a problem. But the way that we rallied while this was continuing is again, all I know is what the market comments were at the time. Is the weak hands, the most overextended got flushed out, and then the rest was a more orderly unwind. It still could happen, but the impact will be mitigated going forward. That said, if Japan loses control of, you know, their currency, it'll be a problem.
Check. All right, Trey, good stuff as always. Appreciate you coming on and sharing your perspective on the bond market. That was all the questions we have from socials, and we'll have you back on soon.
So great. Yeah. Thanks very much for having me on. Anything that comes on, I love jumping on and sharing my thoughts. And yeah, thanks for having me.
Sure. We'll definitely have you back on again soon. Thanks, man. Appreciate it.
My pleasure.
Thanks.
Thanks, Trey. Okay, let me just get back here. Hang on. Always fun to have Trey coming on because, God, you know, sometimes we get, I at least for me, I fall into this echo chamber, right, where I'm just kind of, you know, drinking my own Kool-Aid and stuff, and it's always good. And I think it's really important to, you know, listen to other guys, listen to other perspectives, and kind of see what other folks are thinking. Let's see. Hey, Bo, are you sharing any screens right now?
I stopped sharing when Trey came on.
Okay. Yeah, I did the same. Okay, cool. Yeah, I was just wondering about that because I did the same. I'm going to pull mine back up right now. And I heard Spygate going off pretty seriously down there. And remember, folks, Spygate is our institutional trade tracker. And that is offered for free if you buy an evaluation at pitbulltraders.com, an excellent tool. Look out for more. And there's also an explainer there that'll let you know what that is. We talk about it frequently. We all use it. It's a really great tool. It actually lets you know what the institutions are doing. And when these big, large batch trades go off, we get alerted to them and we can see for how much. And often you'll see algos battling it out, buying and selling. And that's all a great indicator. Great indicator. So check it out. Go to pitbulltraders.com.
So I took my second short signal. So my first short signal was here. I got stopped out, ripped through. I took my second short signal right here, covered 2 on the way down, got stopped out on the third. So that trade paid for this trade. But now I'm still on a short signal right here. This 1 minute time frame is rolled over some. If we drop down below the open and through these levels, then I'll be looking to short actually with size on a retest of the open.
Awesome. Good to know. Thanks for sharing that.
Those were just 3 lot trades with a 4-point stop. This was actually a pretty good trade as well in terms of a look above and fail, right? Because we printed that. It was a really good squeeze. It came back down into that previous little range and then gave you a nice little spot to short, sort of matching high right there, matching that high right there with a tight stop. So for anyone who caught that, that was a nice entry as well. And then you could have been adding to it if you wanted, but I'm looking more for now this confirmation break back below here and below here. You know, you can easily short it right in here if you want with a stop back above the 79s.
And for the folks watching at home, can you give them a breakdown of what time frame you're using, what those moving averages are, and if you could point out the specific prices, that would be great.
Yeah, this is the 1 minute chart on the ES. This is a 13 period SMA look back. It shades red if it's down sloping and green if it's up sloping. So you can see how sometimes it takes a little bit for that to convert over. And this moving average is basically matches the 15-minute chart to the longer moving average. 13 period look back on the 15-minute chart. But what I do is I plot it on my 1 minute so that I can see where it comes in on the 1 minute, which gives a little bit more, I don't know, advanced warning of what that 15-minute moving average might do. And where you might, you know, oftentimes these tests of the 15-minute are really good entries. And when they correspond to the opening price, they can be really good. So, you know, we could come back down here and test the open again and hold, and that could be another great spot to get long, but I don't really like the weakness in NVIDIA, Meta, Microsoft, Tesla. We're starting to get a little pullback in Apple, but Apple's been on a tear this morning. So usually when that's going higher, the rest of them go lower. I'd like to see the advanced declines roll over. And we printed this high here at 11, or, you know, we sort of tested the morning's high and printed 1130 or whatever in advanced declines. I'd like to see them drop back down and actually retest the low of the day in order for this thing to gain some speed to the downside.
Check. Okay. Good to know. Thanks for breaking that down for everyone watching. And thanks for giving us those levels as well.
Yeah.
Sorry, I had to to blow my nose. I won't do that in the office anymore.
And,
I heard your reaction. I was like, oh man, that was a bad move. That was a bad move. With that said, guys, I'm gonna go just use the bathroom. Oh my god.
so, and then this is the other thing I found over the weekend. If people are curious, if you use TradingView,
Join us for
I just
Live from
found
the
this
Pit, where we deliver
this
high-energy
shading
trading
tool where
insights.
you can
Experience live preparation and execution with
can
real
drop
trades and actionable
different
setups.
shaded
Trade
backgrounds
smart, not
based
impulsively.
on
Expect
3
precision and
different
discipline
sort
in
of
every
sessions
move.
that this guy
Watch the
created.
charts,
So
feel the momentum, and make informed
what
decisions.
I've done is sort
Join
of
us daily at
shaded
9 a.m.
this.
and
So
become
this
a
was the
confident
open
trader
right here,
without the noise.
where this color
Subscribe to
turns to
Pitbull
this
Traders
color.
on YouTube and
I've shaded this to remind myself, or to try to remind myself, to try to wait, to give the market some time to show me how strong the buying or selling might be. And then when I get into this black area, this is kind of like my window to try to take entries on, right? So I'm kind of clear to trade right here. We've been up above the open most of the morning. We tested it twice now and held. We made a new high, and now, you know, the sellers couldn't even get back down into this 72, 71 zone, and we've kind of turned back to the upside. And this moving average, you know, as long as price follows through to the upside here, this faster moving average on my 1-minute chart will start turning to the upside again. And if it does, then I'll be looking to buy pullbacks to that moving average with a tight stop, depending on how you want to define that. So when all 3 of my biases kind of align, then I'll take bigger size on that trade. So if we get now, you know, I'd like to see a little more of a violation right into the 81.5, and then some kind of pullback down in here. But I'm gonna wait for it. Like right now, we could just be flattening out, and it could turn into sort of a bit of a chop trade, or, you know, watching Nvidia again as always. You know, it just made another new low right there. So it could be something where we have a sweeper come through and this thing starts selling off again. So if I pull back out on that chart, you can see, like, I don't like to see on this NQ chart on the 15-minute. I don't like to see a big outside candle here and then have it reverse like this. I mean, as long as it holds, it's fine, but it could also just be setting up to sweep back down through the lows. This yellow box that I use on my charts is the ATR. It represents the 5-day ATR on NQ right now. So you can see it easily if you take this, move it up to the overnight low. Look at how perfectly the NQ just fulfilled its 5-day ATR. Okay, so again, oftentimes when we see things trading like sort of the quote unquote the way they should, that's a great spot that you might see this thing reverse. And if we have no additional catalysts on the day to really expand out the ATR, then, you know, you can just see us come back into this range. And that's, you know, if the overnight price action even matters. If you think that the overnight, you know, like if they ignore the overnight price action, and this right here is our low of the day from this first candle, then you can move that up like this. And when calculating where that ATR move would come in, you know, then we might be able to print up to 375 on NQ as our high. So if you were long here, you know, to me, that's how you might help determine, well, just how much should I be trying to hold my runner? Well, they ignore that, all that move overnight, then yeah, maybe we print up in there. If the overnight action kind of is meaningful, then maybe we've fulfilled our range for the day, and this could just get sort of quiet and choppy the rest of the day.
Yep. So quick read on the internals. We are almost 2-to-1 positive on the NYSE, almost 2-to-1 positive on the NASDAQ. VIX gap down, held its gap. It's just chopping around at 1739. Oil's coming off from that 110 high. It's now down 101.64. Gosh, I got to get better at trading oil, man. That thing moves. That puppy moves. Let's see, what else am I noticing here? Russell's still bid. Everything's like the equities are bid. Apple slightly down, Microsoft slightly down, Tesla slightly down, Nvidia slightly down. Bitcoin is bid up 1.5%, trading 81,640. Financials bid, tech is bid. So, yep, that's a pretty good perspective on what's going on in the broader market. Let's see. So what do you guys think? Sell in May and go? Think sell in May and go away pans out this year? Let me know what you think. Drop a comment. Let's talk about it.
Right.
Where is that? Easy Money says, when did that work? When did that last work? Oh, well, you know what? Let's check it out. Why not, right? We're waiting for this target to fill. Let's see. All right, let's blow this out a little bit. Let's look at a 10-year daily and check out May. Why not? All right, so let's see. May, we're in May right now. Bid as hell. All right, so this was May last year, and we were rallying. Selling May came early. Nope, it didn't work last year. Let's see here. Nope, May was rallying. But look at this, though. Interestingly enough, right? We did get this fade right here. Is that May? Yeah, that was May. So one thing I've noticed is that the sell in May is typically like later in the back half of the month. Personally, I think we're going to see some type of distribution in May. Like, I'm not saying that it's gonna be a big sell or anything like that, but I think the way we'll materialize is, probably, a high will be put in, and certainly retesting it a couple of times, but we might just chop and go sideways, something like what we did here, right? But it looks like it came early there, but we did go in the last 2 weeks. Look at this right here. Wait, it's right here. Let me just get my pointer here. Yeah, so this was May. We just got a slight pullback, but this is also indicative of the market we were in. We were in the middle of this tear. So we did see some weakness, but nothing to write home about. I don't know. We'll see. I'm starting to see some early signs. I put it in the market blueprint. You can go there, check it out. It's on the X feed. Some things, some larger picture ideas. I'm starting to see a little turn in the book, specifically in volatility. Volatility is, you can't look. I've learned that you can't just look at the VIX anymore. The VIX is a poor measure of volatility because a lot of people like to hide there. So if you're anticipating volatility and you bid the VIX, a lot of people are going to know it's going to bid the price up. But a better barometer for that is where the volatility is being priced in the options. And for that, we use Vega, we use Vanna, and there's been an uptick, no question about it. There's certainly been an uptick in volatility. All right, so coming into that first target, 85.50, that's probably, it should be 10 points, but that's the one. That's probably 10 points on that contract. Let's see if we can get the fill. I hate being that close to the high. I should probably just peel it off here, but just going to let it work. Just going to let it work. Let's see. One of the sweet things that happened today was while I was streaming, I didn't have the chart up, but the algo executed a trade for me for $400, so that's nice. That's nice. And if you guys want to know more about that, go to pitbulltraders.com or send me an email, manny@pitbulltraders.com. Hit me up on X @manny_trends. All right, come on, film me. Let's go, baby. Let's go. It's always that last tick, dude. It's always that last tick. There we go. Boom, got it. 10 points on that one. Nice scale. Peeling some off, and if you're one of if for those of you that are in a funding program, this is where you'd be locking in some of those gains to stay within your daily within your target limit, right? But we want to peel some off as we go. Again, I think it's a big mistake to try to pass an evaluation in one try. Take your base hits before you know it, you're there. Consistency over home runs is the name of the game. Man, it was interesting the way Spygate was chirping down there. I thought that was really interesting. Oh, come on. Don't do that to me. You're doing so good. Let's go, baby. You know what I want to do? I want to take a look at the core sector list and see how that's doing. Take a look at the weighted AD. Let's see. All right, so core sector list. We have infotech, healthcare, consumer discretionary, financials, industrials, consumer staples, and materials, all bid. Comms, real estate, utilities, and energy lower. Weighted AD is sloping up above the zero line, and it's confirmed with the AD as well. So it's all in unison. So for sure, the one level that mattered today, guys, I think we nailed that one in the pre-market prep, right? The one level that mattered was the pullback to the overnight high, the daily open, and yesterday's high. Held like a champ on basically on two touches on a 15-minute. Held those pullbacks, held the 9-period moving average, and we moved higher. Didn't even make it down to VWAP. Just a bullish look. Let's see if we get the breakout here. If we get the breakout here, then remember our attention shifts up to 7,300. Spygate is down significantly from that. Man, it was chirping like a banshee down there at 72. When we were testing right here, 72, what's that low? 72, 73. It was like an algo party down there. That was in the middle of Trey's talk, so it was hard for me to interrupt him. I didn't want to interrupt him.
Here's my long signal setup. So looking to buy at 82.25. I kind of missed that while I was gone, but let's see if I can get it anyways. 82.25 bid.
Still got these 76s long. I'm looking for a 90 for a 15-point gain. It should be 91. Actually, so this is 90.75. So that contract that's an OCO. So that would be 15 points on that contract. I have 3. I should probably protect somewhat, right? I think that makes sense. If David were here, he'd be like, David would warn me. Do you not have a stop in? Makes total sense. Let's go ahead and protect some here in case we get pulled back. I don't like to trail my positions too tight. In fact, that looks too tight for me right now, to be honest with you.
Seeing a little bit of a bid come back into NVIDIA.
Hey, for the folks watching on socials, right? Can you give them a breakdown of that trade you just discussed? That pullback you ready? I think you said 82s.
82.25. So this is kind of what I like to do, guys, is when the moving average slopes up like this, I wait for the pullback for price to touch the moving average, and then I look to try to buy a retest of that level. And if there's sellers down here, then I'll just get ripped right through. It'll come down, fill me, and it'll just take my stop, right? But if there's not real sellers down here, then sometimes you'll get maybe a few ticks probe down into this level. But then if it rejects and goes higher, then you're looking for obviously that bigger move back to the all-time highs and above. So I kind of missed it partly because I was in the bathroom. I'm not sure if I would get filled, if I would have gotten filled on this. Sometimes it's like being a manual push button trader, you don't get the fill because you're just a little too slow, you know? So, you know, oftentimes it's like you can chase the entry as well and just know that you've kind of chased it. Like, that's what I kind of like to say is if I'm chasing something, but it's not like I'm going crazy chasing it, like you kind of have to know how that works with your own mindset and everything. But like if I'm only chasing it a few ticks, that's no big deal, right? It's still, here's a definitive reclaim of this moving average with a nice little uptrend here and a pullback. And so that's still basically giving you like a little pivot point there that it should hold if price is going to move higher. So I have not canceled my bid. I think that the signal is still valid because sometimes, you know, you get filled on your first offer and then it'll sometimes come down and give you another chance to get in and then it'll go. You know, it doesn't always just go perfectly. I don't mind trying to buy it again here as long as I'm seeing, you know, NVIDIA stay a little bid. Advanced declines look like they might want to take out their highs. But you know, if NVIDIA starts to sharply sell off again, then you know I'm not crazy about buying it so close to the all-time highs when we've had this big run. You know, from a risk reward perspective, it's tricky up here, right?
Yeah. So interestingly enough, and I just heard you. I stepped out to I used the bathroom. You know, I don't like it's. You're right. Being a push button trader, you know, what do you consider like a chase? I don't consider so for me, like generally, like 2 to 4 points is not a chase. Like you just you know sometimes you might be slow, and that happens. That's going to happen, right? But I also I think that is more of a function of what your targets are.
Yeah.
Because if you're targeting a 5-point scale, say, and you have your level, you're like, I can get 5 here. So say that you chase the point, then you knock a point off. So you get 4 on it. Right. But yeah, it's tough though. I agree with you. It's like, you know, it's a stigma that's bad. Don't chase. But you know, sometimes you just can't catch the move. You know, it's just like, do you just miss out on a, you know, 5 or 10 point trade for you know, a point or two, like that's considered a chase? I think they're still meeting those bones. Is, you know, I think it's just more about the management. But I agree with you. Yeah, it's a good call. It's hard. It's hard.
It is.
It's not easy at all.
It's similar for me. The mindset is similar to when I use a stop entry. So like, yeah, you can use a buy stop entry up here if you want. It's 86.5. And if I do that, occasionally I do it. You'll see me do it more on my 15-minute doji reversal signals. I'll use stop entries because I'm bracketing the doji.
Oh, that's smart. That's smart.
But if I use a stop entry, all I pay attention to is when I get filled on that stop, does it instantly go my way or not? Because oftentimes on a stop entry, it fills you and it quickly is 4 or 5 ticks against you. And that to me is just an indication that you just totally got gamed. That, you know, there was no real volume at that stop entry level. And so they take it the other way because they know they've trapped you. So on a stop entry, it's like, you know, you want to see it trade at least a couple points in your favor, like instantaneously. That's just my own personal evaluation of how that sort of price action should behave. And you guys have heard me talk about that before. Like, if I have a theory about something, then if the price action doesn't really confirm how I feel like it should confirm, then I'm just skeptical of it. So right now I'm kind of watching Nvidia closely because it pulled back again to, down near its low, but it's like this is a good level here for it to hold. If it can hold this, it could go straight back up, and we'll see what happens, but it's sort of acting weak. So I did get my fill at 82 and a quarter. So my first offer is 85 and a quarter. My second offer is 88 and a quarter. And again, if this sells hard, then it's just going to immediately sell down through my stop. Got a 4-point stop.
Back to the entries and stuff, like you were saying, using the stop order entry. That's why I like NinjaTrader so much, because most platforms just have a market bid, or but NinjaTrader has, you can buy the bid or buy the ask or go market. And I find that if you're selling instead of going market, you don't know what you could get filled at the lower or high of a candle, right? But if you go sell the ask, or on the buy side buy the bid, it might give you that one tick, but it's not about the tick. It's about not getting that market order while the market's moving and then getting a terrible fill.
Yeah.
I like that feature a lot.
Yeah. And I'm just thinking of it in reverse, right? Like if you were trying to short the breakdown of that level at 82, right? And it only goes 3 ticks in your favor, and now it's kind of reclaiming the center of this range. They know that the liquidity is above in terms of those buy stops, right? So if you were shorting it at 82 or 81 and 3/4, it's like you just want to be careful there, and don't be stubborn about your short, because now it can just rip straight back up and through, because it's trapped. So far there were no real sellers that came in below that level.
Yeah, good point.
And so for me, it's like I'm just trying to capture 3 points on the first target. And so from a similar perspective, it's like now that it's kind of recaptured up into that range, I mean, it should be not that hard to get 3 points, right? In a bullish market, on a pullback, in an uptrend, right? So like same kind of thing. I'm sitting here watching this going, yeah, like if I don't get that first offer pretty quickly, then I'm skeptical. I'm kind of watching it closely, because it's like you can easily scratch a trade sometimes, just because it's like, look, we've come a long way. So, I mean, do I still keep trying to buy this market? I mean, right now, YM and RTY are showing signs of a little pullback right here. Advanced declines did not make a new high right there. Now, whether they pull back or not, we'll see. So I don't know. I don't know if this trade might just break right down, and 80 and a quarter could now be my level to get out, because if it does now break this 81 and a quarter, they could sweep it hard down to the downside. But I'll give it another minute or so. I'd like to see how Nvidia trades. If Nvidia can hold and get back up to the 199 level, then that's kind of the good confirmation that I would like. But I don't know, it's kind of a mixed board. We've come a long way. It wouldn't surprise me at all to just sweep back down to the open and trap everyone long and take some profit. And
I am seeing some divergence up here, guys. So heads up, some delta divergence. And if you're following the execution clock, you know what we're looking for up here. So heads up, be careful, stay alert.
so I went ahead and got short right there instead because I didn't like that I couldn't get my 3 points. And I don't like how YM and R2I look. And I don't like how the advanced declines are kind of rolling a little bit. We'll see if they follow through at all, but usually when I flip, it's not a good sign, but we're seeing
Yeah,
some.
flipping is tough. It's tough because I mean I'm you know I've done it and I do it, right? It's that pivot that you know, okay, I'm wrong and I'm positioned wrong. So let me position correctly. But my challenge with it is just from a risk reward perspective, right? Like I have to understand that, hey, I might, if I'm trading and I have, you know, X amount of points to give for the, that I can lose on the day. I understand, like, hey, I might give up, 2 trades here instead of waiting for later in the day or for a clearer read. So that's always what's in the back of my mind. Like, let me wait, or obviously, if we're by a pivot point, right? I mean, there are certain times that I do it. I try not to do it when we're inside the day's range. So, like right now, the way you're doing it, right, that kind of makes sense to me because we're at an extreme point, right? All-time highs. We're at the kind of like the high point of the day. You're trying to catch a breakout, further extension of the range move. I get it, right? But if you're not right and it turns around, then we're going to traverse the range, and there might be meat on those bones. So that's a perfect example of how I would, I wouldn't reverse in the middle of the day's range.
Yep.
I'm just managing these ATAs here, 2 long positions. I kind of trimmed off more of this one. I had 3 coming in. I trimmed off. So one I got stopped out below this micro pivot right here. Stopped out at 78. So I think it was at 79. So I got locked out. No, it must have been 80 because I literally got stopped out right at the low tick. Trailed it too tight just after I said I don't like to trade that tight, but the divergence that I saw delta divergence with only 4 contracts came off at the high. So it kind of made sense to me that, hey, you know what, let's, bird in the hand versus, that kind of thinking. So I just cleaned it up, just took it off. I'm happy with the small gain. I'm not even sure how much it was. I think it was probably like 5 points or 4 points.
Nice.
I try not to get too enveloped in how many points it was. Like, I know where I have my scales, but I just try to focus on managing it. And
right.
if I find when I focus too hard on like how many points was it, how much did it make, it kind of just skews. I feel like I'm focusing on the wrong things.
So watch and see if Nvidia makes a new low here. It just did. So now see if the market pays attention and actually gives a little sell off. So my first, I'm short 80.5, so it's not great. My first target is 77.5 and then 74.5. It doesn't really act like it wants to go. So I'm gonna cover some here just in case. If it still goes, and I still have some, but it
Hang
didn't.
tight. Did you close it? I think we're seeing some divergence here. You can see that. You see that on my screen in that upper left-hand corner, the red and blue meter right here.
Uh-huh.
I want you guys to use that, right? So what this is telling me, especially the right column, right? So let me highlight it so you guys know what you're looking at, okay? The reason why I'm sharing this right here, especially this right column, is because that's the divergence between the orders that are being stacked in the book. So right now, if it's more red, we're seeing more offers being replenished. So they're selling it and then they're stacking more offers on top of that. So right now we're trading 82.50, 82 quarter, and they're continue to stack offers at 82.50, 82.75, 83. Now they just shifted, right? So that's the divergence between where the orders are being stacked. So right now it's going to be, if it's red, it's going to be harder to go higher because more orders are in the way. And then the left column is the actual orders that are going through. So this is you can't, so don't try to watch it all day long, but instead I use it at entry. So if I'm looking to enter, I want to be on the right side. If I'm looking to enter, I want it long, I want it to be more blue, and so forth. If I'm looking short, I want it to be red.
Nice.
Just so that I can get on the right side of things.
Nice. So yeah, I'm watching the YM is testing its open here. So if the YM can break hard and NVIDIA keeps going lower, then this trade could still work. But now I'm back to my sort of scratch point. And it's like, you know, do I scratch it? I'm going to give it a few more seconds here, see if I can get a little sweeper or not.
Yeah, I got stopped out of that Auto X trade right now for a 3.75 loss. And this one, I'm just going to go. I'm watching this closely here. But if you guys are using the clock, you know what time it is, literally. And that's not, I should have. So I turned this algo. I'm running 3 different algorithms. I turned this one off before I had the chance to. I don't want to get long into a clock pivot, and I should have turned it off, but I didn't. That's on me. So now one of the things we're going to go over in the workshop is how to, okay, so the thinking might be, why aren't you getting short right here? And we're going to go over that. That's a nuance. We're going to go over that in the workshop. So look out for that. God, I got to blow my nose again. Hang tight, guys.
So YM is through its open now. Advanced declines are trying to come off a little bit, but they're still holding in there okay. Let's see if I can get my 77.5 fill. It's too strong. All right. Look at that. NQ just ripping. I'm gonna take out the highs again, probably.
Yeah, you think so? That's one of the reasons why I don't want to get short at a clock pivot high in an uptrend. I'm going to go over all that stuff though, how to use it, how to apply it, and then each day, today's an S1 day, each day has its own characteristic. So it's important to know what kind of day type you're in. Today's an S1L cycle day 2. So here's let me just show you guys something here. Time out. See if I can pull it up here.
Getting a little bit of follow through on the advanced declines, but not much yet. So let's see if they can sort of target that 800 zone, 700, something like that. Again, if there's any real selling right here, it should come down and fill me at the 77.5. But with NVIDIA trying to go bid, then they could just be on a rotation. So you could see YM and RTY come off and NQ and ES rally again.
That's the audio wasn't, so pardon me. I can't get the audio to play.
YM looks like it still wants to go lower here, so if they start to sell it, then the longs could feel a little trapped and this could accelerate and retest our open. There goes NQ to new high. So the rotation continues probably. I don't know. Not, I guess it didn't. Well, it might have made a new high by 1 tick, the NQ there. So I'm going to go ahead and get out of these.
All right, guys, it's 11:40. Ran a little bit over, but if wrapping up the morning, but the volatility isn't over. If you've got the skill but lack the buying power to trade these moves properly, go to pitbulltraders.com. Let's see if you're ready to start trading our money, and you can sign up there for an evaluation and check it out. Shout out to our funded traders, Jonathan, and as well as Edgar. I think they're green on the day today. That's awesome. And that's going to wrap it up for me. You got the levels, we got the timing. If you got anything out of this show at all today, do me a favor, hit the like button, hit the subscribe, drop a comment, let us know what's going on. Let us know how you feel about it. If we're adding value to your trading, that's really important to us. We also want to work on improving the show as much as possible. If you want to go deeper into the blueprint, the execution cloud, go to pitbulltraders.com, or you could email me at Manny at Pitbull Traders. Now go execute. Remember, react, don't predict. And we'll be back at it tomorrow at 9 a.m. Thanks, folks. Appreciate it.